It's really not a question of if something will go wrong in your business, it's a question of when. When you are a small business owner, and practice owners certainly are small business owners, something is going to go wrong. It doesn't really, we don't know when it's going to happen, but something is going to come up. That's just the reality of being a business owner. You didn't start your practice to barely hang on. I'll guess you started it for freedom, impact, and profit. This is Therapy for Your Money. I'm your host, Julie Harris. I'm an accountant, author of Profit First for Therapists, and CEO of GreenOak Accounting. Over the years, my team and I have partnered with hundreds of private practice owners, whether they're just getting started, scaling into thriving groups, or even preparing to sell. We've seen it all, and we know exactly what makes a practice tick financially. On Therapy for Your Money, I'll help you build a business that truly works for you. You'll get quick, actionable tips and episodes so that you can grow a profitable practice, increase your financial confidence, and pay yourself unapologetically, because your work is way too important for you to burn out or go broke doing it. Love the podcast? Make sure to follow and give us a 5-star review. Here is Therapy for Your Money. Hello there, and welcome to Therapy for Your Money. Today is part 1 of a 2-part series about where your money is stuck. We are talking specifically about cash bottlenecks in your practice. If you've been a listener for a little while, you know I say this often. It's really not a question of if something will go wrong in your business, it's a question of when. When you are a small business owner, and practice owners certainly are small business owners, something is going to go wrong. It doesn't really, we don't know when it's going to happen, but something is going to come up. That's just the reality of being a business owner. And so I think you're better served going in thinking like something's going to go wrong. And when it does, I'm just going to tackle it, versus thinking like, oh no, why did this happen to me? It's not about you. It's not personal. Something is going to go wrong. And so today, this is part 1 of the series. We're talking about like cash coming into the practice, cash flow coming in, and when that is a problem. And I think a lot of practice owners, if you've been in business for a little while, you have had that sinking feeling of like, money isn't showing up in the bank account. What's going on? Where is it? Where is it stuck? So today we're talking about what the bottlenecks could be when it comes to cash coming in. Next week, we will talk about cash exiting your practice, right? So spending essentially, and when that becomes a problem. But today we're talking about like where's the money potentially getting stuck when it is coming into your practice. And so a bottleneck is not your fault. May not be something that you even did or are responsible for, but as the business owner, it is your job to fix it. And once you can identify where cash is being stuck, then you can get the cash flowing once again. This is material that I presented at Group Practice Con, which is a great event that Joshua Brummel and I from Therapy Flow hosted in Chicago in September. And so I would love for you, if you're interested in a business-focused conference, I would love for you to check out grouppracticecon.com. We have not, as of yet, announced dates for 2026, but if we do decide to do the event again, that is where you will find it. So get on that email list. All right. On that note, let's get started. Where is your money getting stuck when it is coming into the business? One of the common areas is billing. So where your financial bottleneck is billing. That might be the case if deposits are slow, where you're seeing like, oh, we usually get a Blue Cross deposit multiple times a week and we haven't received one yet. Maybe that could be a billing problem. If all of a sudden your aging has increased, or sometimes even it hasn't increased, or you have a lot of unbilled sessions that are piling up. So that could be that you have a biller who is no longer doing their work. Believe it or not, in my many years of working with practice owners, I've seen multiple times a biller just disappearing, where they were there and then they're not, and they don't even say anything. They just kind of disappear off the face of the earth and stop billing. So that could be a challenge that you're seeing, where there's something wrong with billing. It could be like they have stopped, maybe they were on vacation, in which case you know that, what is happening, but you know why that problem is there. Or they're getting a lot of rejections that they're not working, right? So either you could have aging going way up, you could have aging down because you're not like billing new claims, you're just receiving what's coming in, right? So there's a couple of different ways that could present. If you are faced with that problem though, your goal is to try to shorten the time between the session and billing. So You want to make sure that notes are getting in quickly, that your biller is working on that on a regular basis. Whatever that looks like for your practice, that could be daily, could be weekly, depending on the size of the practice. I would definitely recommend that you use billing software within your EHR or that you outsource it to a professional team. So you might have a biller on staff that's full-time with you. You might be working with a third-party biller. When you are doing that, my general preference is for you to work with a team rather than one single person, just because that's going to create redundancies. It's typically going to be a little bit more expensive, but if it's just the one person that knows your entire system, all that weight is on their shoulders. If they get sick, go on vacation, if something happens to them, are hit by a bus, God forbid, there's no one else, right? Whereas if you're working with a professional team, there are redundancies. And I would absolutely encourage you to run weekly reports, to look at unbilled session, insurance aging, to look at note counts, right? All of those things to be looking at those, whether that is you as the owner going into the EHR or the EMR and looking at those reports yourself, whether it is someone gathering all that data for you and then reporting it back to you, but you should be looking at that. Just because you have a large team doesn't mean that you can abdicate responsibility. You should still be looking and checking and making sure that things that you are expecting are happening, and metrics are a great way to do that. All right, one of the ways that your cash in might be stalled or might become a bottleneck is if you have a staffing issue. So if your session counts are either stagnant or reducing, right? You are typically, your practice sees 400 sessions a week and all of a sudden that is 300. Something might be up and that might be staffing. You might have high team attrition or you might have schedules that are not full. So that means you have multiple team members on your team and each is expected to see 25 clients per week. Maybe they're only seeing 15, right? That's a lot of potential sessions that they're not seeing. Then that could point to also multiple other issues that could mean intake is down, that you have less appointments that you are expecting, that your intake team is not doing a great job at converting callers into clients, right? It could point to a lot of different items. But if that is something that is happening for you, I want you to track clinician utilization. That would be of the hours, of the clinical hours that you were expecting of them, how many of those hours are filled? There are lots of great tools out there now, like Practice Vital is one of them, where that can connect directly to your EHR and track that automatically for you. So you log in and you see this beautiful dashboard that shows like what is the person doing compared to the expectation, so that you can have early and often conversations with your team members on what's going on, right? And in that case, you might discover your team member is, they're falling behind, like they have a lot of personal things going on, or they might just say, hey, I'm here and I'm available. I'm not getting anyone scheduled with me. I need more intakes to stay full, right? So by having those metrics, again, it goes back to numbers. You have more information on what's actually going on in your practice. And if you realize that actually the phone's not ringing enough, we're not getting enough people reaching out, right? Phone, email, text, whatever you are using, then you know that you need to lean in on your marketing to fill clinicians' schedules before you add more staff. So it might not actually be, it might end up being a marketing problem where your staff is not full enough. And so that reveals a marketing problem. And in 2025 specifically, everything has changed when it comes to marketing. What had worked for many, many years is no longer working right now. And so also with the advent of AI, SEO is shifting really, really quickly. And so what used to attract a lot of clients to your practice may not be working anymore. And so there might be a need to make some investments there. Again, work with a professional. If you're looking for that, I would highly recommend the team at Therapy Flow to help you get your marketing back up and running. But that might be something that you need to do. And again, the metrics, the numbers are going to tell you what's going on. And then the third place where you might have an issue with cash coming into the practice is insurance. Insurance can be your bottleneck if all of a sudden payments are slowing down, denials are on the rise, or your insurance aging spikes. We specifically saw an issue like that early in 2020 when all the insurance company had to send their teams remote. All of a sudden, people were just worried about other things and the insurance companies were not issuing payments. We also saw this again in 2024 with Change Healthcare, where a number of insurance companies just stopped issuing payments and didn't actually say anything. They just stopped issuing payments. And then all of a sudden, we as an accounting team and our clients were looking around saying, where's the money? What is happening here? Right before it was even public news, realizing like insurance is not paying what's going on. So if that is the case, that is usually one of the easier ones to identify where you're looking around, looking at the deposits in your bank account and realizing something's not right here. And it's kind of almost a spidey sense. But again, if you're looking at the numbers on a regular basis, you can see the signs before there is, before you may even get an audit letter, right? Sometimes that can happen as well, where the insurance company will audit your claims. They might stop paying for 90 days during that time, but usually you might see something happening before you even get the audit letter or the insurance auditor reaching out to you. What can you do? How can you fix this bottleneck if that is the case that you're in? You can be looking at your numbers on a regular basis every single week. It would be kind of the minimum that I would recommend. So you're looking at claim denials, you're looking for patterns, you're looking at deposits, right? You're looking at what is kind of our normal, and that's not going to be a very specific number. It's going to be a range. And are we within that normal? You want to make sure that your team is verifying insurance eligibility before sessions, right? That you have an idea what you are getting into, what your clients are getting into, so that you don't have accounts receivable that ends up being maybe uncollectible from your client. And in the case of insurance, building a diversified caseload can be really helpful. So being on multiple panels, most of the time you're going to get a big chunk of your clients from one or two payers. That's not uncommon because just regionally you'll see kind of a few payers be the top dogs in that area. But relying heavily on just one single payer just can be a little bit more risky, right? So that doesn't mean you should accept every insurance in your area, but look at the ones that pay the best. And although you can't share those rates with your colleagues, you can still ask, like, what are the ones that pay well, right? Like, or which insurance payers don't pay well, right? You can ask some questions along those lines to get an idea of where do you want a credential or not. But the more you diversify and the more credentials you have, then the less you're relying on one specific company, and that can be really helpful. Sometimes adding cash pay clients as well can be helpful, or dropping panels that don't pay well, but that's a very different kind of marketing, right? So if you have a mostly insurance-based practice, dropping one panel isn't necessarily going to change everything overnight. It might just mean that one panel, you're no longer getting that really low reimbursement. And so you can focus more on the clients that have higher reimbursement. But building a cash pay practice is just a very different animal. So I'm not saying you shouldn't do that. It's just not an overnight fix. But really, what I want you to take away from this episode is that it's not your fault if something is happening. It's just your job to keep an eye on things and have systems that can verify that the things that you expect to happen are happening, right? That part is your job. It's not happening to you. You have to be the one looking at what is going on in the practice. And you don't have to be the one measuring everything or coming up with the metrics every week, but you must have visibility. You specifically, you must have visibility. Even if you have a practice director, a director of ops, a COO in your practice, you must still have visibility and look. We work with many practice owners who are taking a step back and maybe going in a different direction. They're taking a much more passive role in their practice. And I love that for them. I think that is a wonderful and amazing. And yet they must still have visibility, because if something is happening, you don't want that to be hidden from the owner where the practice is being run into the ground and they had no idea. And so these systems, these metrics are going to help protect everyone in the practice and make sure that everyone is on the same page of this is what we're expecting and this is what's happening, so that you can make sure that the practice lives to see another day, week, month, and year. I will be coming back next week with our financial bottlenecks for cash outgoing of the practice. So make sure you join us for that as well. That's all for today. Take care. That's it for today's episode of Therapy for Your Money. Catch us on Instagram and Facebook at Therapy for Your Money Podcast. And don't forget to subscribe to GreenOak Accounting on YouTube. Until next time.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.